Brazil, Latin America's largest economy, a country with 215 million consumers, a booming agribusiness sector, a thriving fintech ecosystem, and one of the most complex tax systems in the world. If you're a foreign investor looking at Brazil, whether through a holding company, a private equity fund, or a direct stake in a Brazilian business, the tax landscape has shifted dramatically over the last 12 months. I'm Bata Simões, an international attorney at BSP Law in São Paulo. In this video, I will walk you through the 5 key tax issues every foreign investor needs to understand before putting money into Brazil in 2026. Let's start with the biggest news, dividends. For nearly 30 years, since 1996, Brazil was one of the very few countries in the world where dividends paid to foreign shareholders were completely exempt from withholding tax. That made Brazil extremely attractive for foreign holding structures. Well, that era is over. Under law number 15.2070, 2025, effective January 1st, 2026, dividends paid by Brazilian companies to non-resident shareholders are now subject to a 10% withholding income tax, known in Brazil as IRRF. There are exceptions, which are foreign governments, sovereign wealth funds, and foreign pension funds that remain exempt. And this is a very good strategy if you're planning on sending those dividends offshore Brazil. Many people that I know, they are already structuring their pension funds, but of course, it is a little bit costly. And then you need a very good lawyer in Brazil that will help you to draft those answers, to draft those strategies, okay? But now there's a silver lining. Brazil also introduced a refund mechanism. If the combined effective tax burden on the Brazilian company plus the 10% dividend withholding exceeds the nominal corporate rate, typically 34%, the foreign investor may claim a refund of the excess. This is designed to prevent double taxation at the corporate level. And for profits generated up to December 31st, 2025, there was a rule that if you had drafted an ata of dividends, you can still distribute those accumulated gains under the old exemption, provided the distribution was approved before year end. So if you haven't acted yet, speak to your Brazilian consul immediately. Second topic, capital gains. If you sell shares, quotas, or real estate assets located in Brazil, you will owe Brazilian tax on the gain, regardless of where you're based. For non-residents, the rule is simple but significant. Capital gains on Brazil assets are subject to progressive rates ranging from 15 to 22.5%, depending on the size of the gain. For stock exchange transactions, gains are taxed at a flat 15% or 20% for day trading, following recent changes under provisional measure medida provisória número 1303, 1303 of 2025. And if you're investing through a tax haven jurisdiction, what Brazil calls paraísos fiscais, be aware, withholding rates can reach 25% on certain income and gains. Brazil maintains a specific list of low-tax jurisdictions and privileged tax regimes, and investment structures routed through those locations face significantly higher tax burdens. Third, interest on net equity or juros sobre capital próprio, the JCP. This is a uniquely Brazilian instrument. It allows companies to deduct from taxable income and a notional return on shareholders' equity, essentially a tax-deductible dividend substitute. It's been a popular repatriation tool for foreign investors for decades. Starting January 2026, the withholding tax on INE payments to non-residents increased from 15%. While JCP remains available, its tax efficiency has been reduced. Investors using INE heavy repatriation strategy will need to reassess their models. Number 4, The EOF, Imposto sobre Operações Financeiras, Brazil's tax on financial transactions, including foreign exchange. 2025 was a turbulent year for EOF. In May 2025, the government dramatically raised EOF-FX rates as part of a budget freeze package. The market reacted sharply, and the government partially reversed course. The key takeaway for foreign investors today, the EOF-FX rate on repatriation of foreign investment capital was reduced to 0% by Decreto number 12,499 of 2025. It was a significant relief for those looking to exit Brazil. However, and this is really important, EOF rates are set by executive decree and can always change really quickly. It really depends on the mood of the government. What's 0% today is not guaranteed to be 0% tomorrow. So any long-term investment thesis for Brazil needs to factor in this regulatory volatility, okay? Fifth, and perhaps most important for long-term investors, Brazil's structural tax reform. Complementary law, Lei Complementar 214, number 214, is replacing Brazil's fragmented indirect tax system, which was composed by PIS, COFINS, ISS, ICMS, with the dual VAT model called IBS e CBS. The transition runs from 2026 to 2033. Brazil has also revised its transfer pricing rules to align with OECD standards, effective from 2024, and introduced Pillar 2 global minimum tax rules in 2025. For multinational groups with Brazilian subsidiaries, this means compliance complexity is increasing significantly over the next several years. Your Brazil tax exposure can no longer be managed in isolation from your global structure. So, is Brazil still worth investing in, Bata? Absolutely. It remains one of the most dynamic emerging markets in the world with unparalleled natural resources, a sophisticated financial system, and growing integration into the global economy. But the days of investing in Brazil without a robust tax strategy are totally gone. The rules around dividends, capital gains, INE, EOF, and indirect taxes have all shifted, and more changes are likely to come. Whether you're structuring a new investment, planning a capital repatriation, or reviewing an existing holding structure, you need specialized Brazilian legal and tax counsel at the table. If you'd like to discuss your specific situation, reach out to me. My links are in the description, okay? And if you found this video useful, subscribe please. We cover Brazilian law for international clients on a regular basis. See you in the next one, and thank you so much for your precious time. Hope to see you soon again. All the best.